People have long thought that investing in gold and silver is a smart way to keep their money safe, diversify their portfolios, and protect themselves from economic uncertainty. People have been interested in these precious metals for hundreds of years because they are visible signs of wealth and status. Gold and silver are both beautiful, but they also have a number of unique qualities that make them good investments. Gold and silver are attractive because they have always kept their value over time, while paper currencies can lose value and become worth less over time. They are a way to store value that is independent of countries and economies. Because of this, investors look to these precious metals as a safe place to put their money during times of economic instability and political tensions. Let's start with 10 reasons to invest in gold and silver. Number 10. Keeping your money. Gold and silver have long been used to keep money safe. The value of gold and silver hasn't changed much over time, unlike the value of fiat currencies, which can go up or down in value. This stability comes from the fact that they are rare, have unique physical properties, and are recognized by everyone as valuable assets. By investing in gold and silver, you can help protect your wealth from the effects of inflation and make sure that your assets keep their value over time. Number 9. Diversification. Adding gold and silver to your portfolio of investments helps you spread out your holdings. Diversification means spreading your investments across different types of assets to lower your risk. Gold and silver often don't go together with other assets like stocks and bonds, or they go against them. This means that the value of gold and silver may stay the same or even go up when the value of other investments goes down. By adding gold and silver to your portfolio, you may be able to lower the overall risk of your investments and make them more stable, since the value of these precious metals may not move in the same way as other asset classes. Number 8. Safe haven assets. Gold and silver are usually thought of as safe haven assets. When the economy and the world's politics are unstable, investors tend to buy these precious metals to protect their money. When traditional investments like stocks or currencies are affected by market volatility or turbulence, the value of gold and silver can stay steady or even go up. This is because gold and silver are seen as ways to save money that are not directly tied to any government or financial institution. Their history as safe assets makes them appealing to investors who want security and stability during times of trouble. Number 7. Inflation hedge. Gold and silver are both good ways to protect yourself from inflation. Inflation is the general rise in prices over time, which makes fiat currencies less valuable. Gold and silver often go up in value when the value of paper currencies goes down. This is because these precious metals are hard to get and have a high value on their own. This makes them a good way to save money. As paper currencies lose value due to inflation, the value of these metals tends to go up. This helps you keep your purchasing power and the value of your investments. Number 6. Limited supply. Gold and silver are hard to find, and there are only so many of them in the world. The process of getting these precious metals out of the ground and making them is not easy to scale up. Even though new places to find and mine gold and silver are being found, the overall supply is not growing as quickly as the demand. This limited supply adds to their long-term value and the chance that their prices will go up. As the demand for gold and silver keeps going up, especially in industries like jewelry, technology, and investing, their limited supply can lead to a good supply and demand relationship that keeps their value high over time. Number 5. Global acceptance. Gold and silver are valued all over the world, and everyone agrees that they are valuable. For thousands of years, different cultures and civilizations have used them as a way to buy and sell things and to store value. Because gold and silver are so widely used, they are easy to buy, sell, and trade all over the world. They have a deep and liquid market, which makes it easy for investors to get into or get out of their positions. Gold and silver are good investments because they are used everywhere and are easy to get. This gives investors from all over the world flexibility and access. Number 4. Portfolio insurance. Gold and silver can be used to protect your other investments. Traditional investments like stocks and bonds may lose value when the market goes down, the economy slows down, or when something unexpected happens. But gold and silver tend to move in the opposite direction of these assets. Gold and silver may hold their value or even go up when the value of other investments goes down. By adding gold and silver to your portfolio, you might be able to make up for losses in other areas and protect yourself from market fluctuations. This feature, which is similar to insurance, can help protect your overall wealth and give you stability when the economy is bad. Number 3. Tangible assets. Gold and silver are tangible assets because they are things you can hold in your hands. They aren't like stocks, bonds, or digital investments because they can be seen and touched. Some investors feel safe because they can touch the investment. Having physical gold and silver can make you feel like you own your investments and are in charge of them. Physical gold and silver can also be a good thing to have on hand when the economy is uncertain or there are systemic risks. Even though there are ways to invest in gold and silver without actually owning them, such as through exchange-traded funds, ETFs, or certificates, some investors like the idea of owning physical assets. Number 2. Historical performance. Gold and silver have both shown that they could do well in the long run, even though short-term price changes are possible. The past performance of these precious metals suggests that they may be good investments in the long run. Gold and silver have both seen their prices go up a lot in the past. This was caused by things like inflation, economic uncertainty, and higher demand. But it's important to remember that the past isn't a good predictor of the future, and the value of gold and silver can be affected by a number of things, such as market conditions and investor sentiment. Number 1. Investment demand. Both gold and silver benefit from investment demand, as well as demand for jewelry, industrial use, and technology, among other things. More people around the world want these metals, which can be good for investors. Most of the time, the demand for gold and silver is driven by growing economies, especially in emerging markets. Also, geopolitical worries, economic worries, and market volatility can make investors want to buy precious metals because they seem safe and stable. This demand can cause gold and silver prices to go up, which could be good for investors who want to make money from rising prices and changing demand. In conclusion, investing in gold and silver can be a good way to add value to a portfolio. Gold and silver investments offer a number of benefits, such as wealth preservation, diversification, protection against inflation, and the appeal of having something you can touch. These precious metals have stood the test of time as safe places to keep money, giving stability and security during times when the economy is unstable or when there are tensions in the world. Gold and silver have a long history of keeping money safe, often doing better than other asset classes during times of market volatility and economic downturns. The fact that there aren't many of them and that everyone knows what they are makes them valuable and likely to go up in price. But it's important to be careful and think carefully before investing in gold and silver.